This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello. Robert Kiyosaki, the Rich Dad Radio Show. Good news and bad news about money. And today we have really some bad news for all you idiots out there who save dollars. And all the idiots who actually work for dollars. And all the idiots out there who are invested in the stock market. Because today you're going to learn something that you guys should understand. It's called crypto. And we've been doing a whole series of shows, thanks to different people. Thanks to our friend Anthony Pompliano, the Pomp Report. And, he's bringing me up to speed because I'm an old guy. Like everybody who made money started early in crypto. I mean, they went up and down, went from $1 to $5 million to 10 cents to $300 million and down again. And, the Mt. Gox went bankrupt, which everybody loved. All the old guys loved that one. But in the meantime, crypto, or specifically Bitcoin, is hanging on. And so I made a lot of my money investing in silver in 1964. And it was, back then, it was really worth 10 cents. Today it's worth $3. But anyway, that's the name of the game. To get a little bit early, and then I bought my first gold coin in 1972 in Hong Kong because it was illegal for Americans to own gold. So the key to success is being early, getting on the train. And the reason I say the idiots out there are still saving dollars, you got to be kidding me. And bitching about Trump not paying taxes, you got to be kidding me on that one. But anyway, you better open your mind up. That's what I'm saying. So I'm an old guy. I have gold, silver, and Bitcoin. But I don't know everything about gold, silver, and Bitcoin. So that's why we have the Rich Dad Radio Show. And we bring people on who know a little bit more than us. Any comments, Kim?
And BlockFi is an asset-backed lending platform for crypto. And the vision of BlockFi is to bridge the worlds of traditional finance and blockchain technology to bring financial empowerment to clients on a global scale. So welcome to the show, Zac Prince.
Hey, thanks for having me.
So tell us how you got into, where you're from, where you go to school, a little bit of background, and how you got into crypto.
Yeah, so I grew up in Texas and graduated from college at Texas State University. I've always worked at venture-backed technology companies since finishing school. I was originally in the advertising technology sector, and then more recently and more relevantly for BlockFi, worked at two different companies in the fintech sector, specifically the lending side of fintech. And while I was working at one of those companies, I started a small blog that was talking about different types of new fintech companies that are creating products for consumers like robo-advisors and lending platforms. And that's what led me to discover Bitcoin. And towards the end of 2014, I was recommending on this blog that people download the Coinbase app and buy a little bit of Bitcoin, because I thought that a lot of what happens in the fintech sector is companies taking a traditional banking product and just putting a new front end on it. So, okay, you can have a bank account with a mobile app. And what I thought was incredible about Bitcoin is that it was something completely new, truly digital, truly decentralized, truly global, truly fixed supply asset. And we hadn't really seen anything like that before. It was very innovative. So Bitcoin had gone down from $1,000 to $300 at the time that I was writing this blog. And so I bought some. And then maybe a week or two later, the price of Bitcoin doubled and I sold it all because I thought I just made, such an incredible trade. and then I ended up buying it back at a, higher price. And I went down, the rabbit hole of trying to understand what was happening in this space. Fast forward a couple of years, early 2017, the prices had started to go up. There seemed to be some real mainstream excitement building around the cryptocurrency asset class. And I started talking about it a lot at home with my wife, and she didn't want to talk to me about it. So she said, you need to start going to some meetups in New York and finding other people to talk to about cryptocurrency. And I went to one of these meetups and I said, at a certain point, if this thing continues to grow, you're going to need the ability to use your Bitcoin as collateral for a loan. You're going to need the ability to earn interest on your Bitcoin holdings. You're going to need the ability to seamlessly transfer it and trade it and integrate it with these financial services that exist for every other asset class in the world. And I said, I have this idea. Should I build a company around the idea? And whoever was at the Bitcoin meetup with me was like, oh, you should have started on that yesterday. That's going to be huge. It's a great idea. And so we started BlockFi in the third quarter of 2017 with the idea of building, financial services for crypto investors. And we've come a long way since then, but that's where we got our start.
So it's interesting that your academic programming is in traditional finance, and then you graduate just the same year that Bitcoin comes out, and then you start realizing you can blend two worlds. But I think one of the more interesting words you use today is fintech, and the reason fintech is important, in my opinion, is because fintech is going to put bankers out of business. So just as there's pilots who are unemployed today, fintech's going to make a lot of bankers unemployed also. And I don't know if you agree with that, but I watch what you guys, the young guys, are doing. I'm going, holy mackerel. You're going to put a lot of guys out of work because the guys that can go to banking online will kick butt on mainstream mom and pop banking. That's my opinion.
Yeah, I mean, look, it's a trend that's been in place for a while now. And throughout my career, I've hired a number of folks from traditional banks and traditional financial services firms, and they always have a similar reaction when they come and work at a financial technology company, and it usually centers around two things. Number one is they're like, oh my God, I can't believe how fast we're moving, because fintech companies, you're constantly innovating, you're constantly building new products that add more value for your clients. And banks, everything moves at the speed of a slug. The other thing that they comment on is, it's just so incredible to be in an environment that is experiencing growth, because a lot of the different businesses within banks, whether it's prime brokerage or consumer lending or other businesses, they're flat to down. It's not a growth sector. And so
let's just cut to the chase. Will bankers lose their jobs?
I think some already have. It's already, I mean, it's already happening.
Please understand, Buffett dumped his banking shares sometime this year.
Yeah, he did.
When I talk to the old guys in my generation, they go, what does that mean? I said, it means it's just starting. And, what happens was the Fed and the Treasury went into the, what I call the repo market. At that point, the whole banking system was coming apart anyway. And so meanwhile, you guys are picking up speed and you're replacing banks. So when you say you created a place for cryptocurrency, it's almost like a securitized or a what I would call a fractional reserve type of process of traditional banking. So, somebody with a lot of Bitcoin, they're gaining no interest off of it. But just like in the real world, the people with $1 million cash, they're now charging them negative interest rates. So it's now costing a guy with $1 million in cash to store their money in the bank. So let's say get $1 million and it's minus 5% interest. They're charging them $50,000 to store their cash. And that's why Dalio just said of Bridgewater just said cash is trash. I like to brag that I've been saying that for years, cash is trash. And that's why I was early into gold and silver, and now it's Bitcoin. So anyway, Can you explain BlockFi and how does somebody acquire some kind of revenue or dividend or money stream, financial stream from BlockFi?
Yeah, let's say I have a lot of Bitcoin and I'm just holding it. What would I do with you?
Let's even start with saying you don't have any Bitcoin yet because you're still learning about it. What you could do with BlockFi is you could, either using our website or our mobile app, create an account. You could connect to your bank account and ACH dollars onto our platform. The minute that those dollars hit our platform, you're earning an 8.6% annual yield on them that's paid out every month. So we're not charging you to hold dollars on our platform. We're actually holding them as stable coins, and you're earning a very attractive interest rate on them. Then whenever you're ready.
How much interest?
8.6% annual yield.
If I give you $100, you're going to pay me $8 per year?
$8. You'll have 100 at the end of the year. 1 year after you deposit $100, you'll have $108.60 on our platform.
So I put $100 cash, and then you turn that into Bitcoin or crypto?
We turn it into what's called a stable coin, which is basically a digital representation that's backed by $1 in a bank account, but it's a dollar token. And that's what you're earning 8.6% interest on. Now, at any point along the way, you can take the $100 out of stablecoin and send it right back to your bank account, including with whatever interest that you've earned. Then you can also use those dollars to buy either Bitcoin or a tokenized version of gold, which is also available on our platform. Once you purchase those things, you start earning interest in that asset. So right now, if you're holding Bitcoin on our platform, you earn a 6% annual yield on your Bitcoin paid in Bitcoin. And you could just take Bitcoin that you already have and send it directly into your BlockFi account. You don't have to fund the account with dollars. You can also fund the account initially with Bitcoin if you already have some, but it's so simple.
So Zac, the curious mind wants to know, how do you generate 8%?
Yeah,
so
me
you have
too.
to be generating about 15% to make that thing work. And that's why I was mentioning the dollar is based on the fractional reserve system, which is if I donate $1 to the bank, they're going to lend out $10. That's why they get their returns. So how do you guys generate that return?
Yeah, so our system is fully reserved. We don't have the unique ability that traditional banks have that are connected to the government to create new monetary supply in the form of loans. So any loan that we make on our platform is coming from dollars that already exist or Bitcoin that already exists on our platform. The reason we're able to generate the high yields is that we are doing lending in the crypto sector. There's a couple different use cases for that, which we can go into. One example would be, let's say you bought Bitcoin at $100 and now Bitcoin is $10,000, almost $11,000 today. If you sell your Bitcoin, then you have to pay taxes on the difference between $11,000 and $100, the price that you bought it for. If you get a loan secured by your Bitcoin, you still get cash, but you don't have to pay taxes. And if you use the proceeds of the loan to make another investment, you can deduct the interest that you're paying on that loan from your taxes in the current year. We make those loans on our platform today, and someone who borrows cash secured by their Bitcoin pays an interest rate that's a little bit higher than the 8.6% that we pay to folks who are just holding cash on our platform.
So how much are you making?
How much are we making? We have pretty thin margins right now.
So if I was going, so I have Bitcoin and I want to take out a loan, what's my interest rate on the loan?
It depends on the loan to value ratio that you take the loan out at. So let's say you have $10,000 worth of Bitcoin. If you use that $10,000 worth of Bitcoin to take out a $2,000 loan, your interest rate would be 4.5%. If you use the $10,000 worth of Bitcoin to take out a $3,500 loan, your interest rate would be 7.9%. And if you use the $10,000 of Bitcoin to take out a $5,000 loan, your interest rate would be 9.5%.
Okay, so when you come back, I'm going to ask you some tougher questions here because you're treading on some thin ice out there. I mean, very thin ice. But I'm going to be a little picky on this whole thing. And when we come back, I'm going to ask you something. I mean, I can promise anybody a 20% return. I have. Trouble is, it didn't perform. You know what I mean? So that's really what you're saying right now. So I want to know how you securitize, and how much of it is counterparty risk.
Absolutely.
If you're loaning, that's because really that's the issue with the fiat dollar is counterparty risk.
That's right.
Who is the guy on the other side of the transaction? And the reason I like gold and silver is there's nobody else on the other side but God on that transaction. So that's how simple I am. So when we come back, we'll be talking more about how you generate 8% interest on Bitcoin. We'll be right back. Welcome back. Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And we're having an entertaining program talking today to Zac Prince, CEO and founder of BlockFi. Now, this is very important because he started basically Bitcoin or a crypto bank, and he's paying exorbitant interest rates, like 8%, which is a lot of money. Anyway, you can listen to the Rich Dad Radio Show anytime, anywhere on iTunes, Android, and YouTube. And please leave a review of what you thought of our comments here on Android, iTunes, and YouTube. Also, all of our programs are archived at Rich Dad Radio for one main reason. We don't sell anything. We're not recommending you go to Mr. Zac Prince and turn over your life savings here. We just want to hear him out here. Give him his time, because in the real world you don't have much time. So we're just giving Zac, at least 15 minutes of time here. And he comes highly recommended by a good friend of ours, Anthony Pompliano, and a bunch of other guys. So that's why he's on this program, because if Anthony recommends it, he's probably pretty good. But we're not selling anything. Any comments, Kim?
Well, Zac's website is BlockFi.com, and basically, if I understand it correctly, BlockFi is it's a lending platform for crypto. So backed by your crypto, your Bitcoin or other cryptocurrencies, and I think it's very creative. I'm such a newbie on cryptocurrencies. I'm doing my best right now to get as much education as possible, because I'm also of the old mind thinking. So, Zac, just give me an idea of why is this such a revolutionary, innovative idea? What if Bitcoin goes to zero?
Yeah, so we could talk about the myriad of reasons why Bitcoin won't go to zero. But I think the fundamental reason why we've had some good success at BlockFi is that for a lot of the things that we're doing, we're making cryptocurrency familiar to folks.
I understand. Hey, I'm not here for a Bitcoin pitch. I got Anthony for that, Pompliano. Yeah. I just want to know, how in the world can you promise 8% interest? That's really what I want to know. The banks can't do it. I mean, do you have a crystal ball or something?
Let's drill into this. So we operate in the cryptocurrency sector, which today fundamentally is a nascent asset class with some structural inefficiencies still, and a lack of access to scalable traditional pools of capital. So what that translates into is two things. Number one, there are lots of opportunities for trading firms who are doing market neutral arbitrage type strategies to make money. And number two, because there's not a lot of capital available, when you're making loans that are even loans that aren't risky at all, because you're lending someone 50 cents and they're giving you $1 of collateral, you can still earn a pretty high yield. So fundamentally, that's why we're able to offer the high yields that we offer to folks who are holding their assets on our platform, because it's a nascent sector with a lot of opportunities. And because
define nascent, that's a little bit beyond my limited mind here.
So it's new, and all the kinks haven't been ironed out. And I'll give you an example of one. It's still very common today that the price of Bitcoin will be 20 different things on 20 different platforms. So if you're buying Bitcoin on Coinbase and someone else is buying Bitcoin on a platform in China, they might pay a price that is $100 different. And that's just a market inefficiency that some people take advantage of. So trading firms, big market making proprietary trading firms, you read about them all the time in the equities market now, Citadel and others like them. They make their living providing liquidity into a market. So they'll, sell it where it's $100 more expensive and buy it where it's $100 cheaper, and they make the difference.
Right. It's called arbitrage.
Exactly. It's called arbitrage. They are having a field day in the cryptocurrency sector. It's like things that used to work in traditional markets in the 80s now work in the cryptocurrency sector. So you asked earlier, Robert, about counterparty risk. The majority of our lending book doesn't have counterparty risk in it. We're lending over collateralized by another asset. We're either lending dollars with Bitcoin as collateral, or we're lending Bitcoin with dollars as collateral. There is a portion of our lending where we do take counterparty risk, and it's to some of the largest market making and proprietary trading firms in the world who have very strong balance sheets and histories of profitable operations. And at BlockFi, we made our first loan in January of 2018. So we've been in the crypto market through multiple days where Bitcoin went up 30% or more in a single 24-hour period, and also multiple days where Bitcoin went down 30% or more in a single 24-hour period. And throughout that entire time, we've never lost a penny across any of the lending that we've done.
So you make your money from trading the It's like an options trader would make it on puts and calls and all that stuff. They're just making making it on volatility. But you're saying you don't make it on, and you have very few people borrowing money from you, or
No, we have a lot of people borrowing money from us.
and
We're not trading. We don't take. We're not taking principal risk, betting on which way the price of Bitcoin is going to go. We're taking assets from, let's say, your co-host. She's earning 8.6%, and you are borrowing those same assets from us, collateralized by Bitcoin or something else, and paying 9.5%. We make the difference.
I understand, but the counterparty risk. I'm keep it really simple. If I loan money to my cousin, and the guy's a complete deadbeat, that's a lot of counterparty risk. That's what we're getting at. And the reason our markets are collapsing right now, the traditional fiat markets, is because they loaned it to some of the biggest banks and CEOs and corporations. They just loaned that money out. After 71, you could just print money and lend it. That's how money comes into creation. So I just want to know who's going to pay that 8%. I mean, if it's my Uncle George, who hasn't had a job in 10 years, I don't think he's going to make the payment. So that's counterparty risk. I want to know, how in the world do you make that 8%?
So let me just ask, Zac, so are you saying when you make a loan collateralized by Bitcoin, there's a huge gap? I mean, you don't make a loan more than 50%?
That's right. On our retail platform,
is that where the safety comes in?
If Uncle George wanted to borrow money from BlockFi, if he wanted to borrow $5,000, he would have to give us $10,000 worth of Bitcoin and hold it on our platform. So we take possession of it. And then if the price of Bitcoin goes down at a certain point, Uncle George would get a margin call. And if it goes down even further at a certain point, we would sell some of Uncle George's Bitcoin to make sure that there's no default or losses on the loan.
That's called a bail-in in my world.
It's called a secured loan.
No, it's called a bail-in. You take the saver's money.
But nobody takes a haircut.
I just, the reason I'm spooked in this whole thing is because, as you know, the pension markets have all based their projections on 7.5%. And nobody's achieved 7.5% yet in the last 20 years. And that's why our pensions are bankrupted now, and it's forcing pension companies into higher risk investments. And that's what's going on. I just want to know, the question again is, 8.5, whatever, let's call it 8%. That's a lot of money to assure somebody on their deposit.
Yeah, so we're still at small scale. So we have $2 billion worth of assets on our platform now. So it's not super small, but it's small in the grand scheme of things.
Look. There's one thing that the banks have is a thing called FDIC.
That's right. We do not have that.
Are you guys FDIC?
We are not. So there's more risk here. There's more risk here than an FDIC insured bank account.
What FDIC is basically an insurance company that is private, and then it goes to the banks and said, if you lose all your money, we'll back you up. And what happened is people now know the FDIC doesn't have any money, and that's why people are sitting on pins and needles going, heck, if that bank goes down. And that's why Buffett getting out of banks this year, to me, was like the canary in the coal mine. I mean, where's everybody running,
So, Zac, what happens, because you said this has happened, so sometimes the price of Bitcoin can go up dramatically, but it can also come down dramatically. Yeah. If I've taken out a loan backed by my Bitcoin and the price of Bitcoin drops dramatically, what happens to me? What happens to me?
First, you receive warnings. The price of Bitcoin is going down. Your loan to value ratio is becoming unhealthy. Later, you would receive a margin call where you have a period of time where you either need to add more collateral or run the risk of having your existing collateral liquidated. And then if the price keeps going down at a certain point, it gets liquidated. It's analogous to the way...
Kind of like a margin call.
It's exactly like the way borrowing money secured by stocks in a brokerage account works.
Yep, exactly.
So that type of lending is generally viewed as the least risky type of lending that exists. When you're lending secured by liquid collateral, that you hold possession of and can sell whenever you want. So all throughout, the history of margin lending, our chief risk officer ran that side of Bank of America Merrill Lynch for 15 years before coming to BlockFi, including throughout 2008 and 2009.
He didn't do too well between 2008 and 2009 either, did he?
His part of the bank never lost a penny.
That's good to hear.
The real estate lending and the real estate lending and the securitization.
That's like saying he used to be the skipper of the Titanic. So we're very happy to have him on board. Anyway, I appreciate your good sport here. I'm just giving you tougher questions old guys would ask because, we've been fucked so many times. We're kind of used to it. And we've heard every statement. I'm going, holy mackerel, another one, So I
think it's healthy to be skeptical. And I think that's the right approach to take.
Well, it's more than skeptical is that, I'm tired of bending over, and I've had enough of that. So anyway, the reason I like gold and silver is because there isn't much, there's still counterparty risk, but it's not much. Once I hold the physical, the gold or the silver, it's in God's hands, my hands. I don't have to worry about it too much. And I'm buying Bitcoin right now because of Anthony Pompolino and guys like you. And, because I'm trying to do my best.
You can do the same thing with Bitcoin. You can just hold the private keys yourself.
We do.
Yeah.
We do. I'm not saying, but the point here is this. It comes down, in my old world, it's called counterparty risk. Who is the other guy in the transaction? And Absolutely. If you listen to old guys like me, like my friend Jim Records, that's what almost brought down LTCM, long-term capital management, with the Russian ruble, which started going bad in 1999. And so we've been screwed so many times that's why when we see young guys coming up, I don't know if you guys have been pounded that bad yet. And so it's really easy. It's really easy to say, well, I'm the millennial, I'm this, I'm smarter than the old guys. But lending money is as old as the day is long. It goes back 5,000 years. It goes back to the days of a goldsmith on a fractional reserve system. You go to the goldsmith, you deposit your gold, let's say $10 worth of gold, and the goldsmith will lend out $100. It's called fractional reserve. And I'm waiting to hear where you're fractional, but you're saying you're securitized by you're holding the gold.
So we don't have a fraction. The key difference between fractional reserve and what we're doing is that we don't have an ability to lend out more assets than what comes in.
Right? No, I don't doubt that. I just want to know what happens if you loan it to Joe the Schmuck, What happens if you loan it to Wells Fargo and they disappear, or the Comex and they disappear?
Well, there's certainly counterparty risk in some of the lending that we do, and there's certainly counterparty risk in holding Bitcoin with BlockFi instead of just holding it yourself. We think that one of the beauties of what's happening in the Bitcoin ecosystem is that you have this plethora of options, which includes self-custody, includes options like BlockFi, includes everything in between. And that's going to keep growing.
And so what you're saying is, let's say Kim and I have $1 million in Bitcoin. We can leave it with you and you'll pay us interest, but we don't have to lend it out, or we don't get any interest if we don't lend it out. Is that the thing?
So right now, we only offer the ability to hold assets with us that are available to be lent, and as a result, you earn a yield on. In the future, we will likely introduce a custody-only, account where there's no interest earning. The money, never gets lent out. But today, our real, differentiating value prop that we've focused on is that ability to earn a yield on your Bitcoin.
Okay, I understand that now. So if I give you $1 million and you lose $1 million of Bitcoin, who do I talk to?
Well, you could talk to any one of our regulators at the federal and state level. I might be in handcuffs.
That's a pretty sight. No, hey, look, Zach, I'm just giving you a hard time because the old guys are going to ask you this question. The young guys, they dance through the posies and primrose and the butterflies, and they hold hands and sing Kumbaya. And your generation, everybody got a trophy and nobody lost, It's not the real world, though.
I hated that even when I was a kid. I threw the participation trophies in the trash. I thought it was totally
It was. So let me ask you this, Zach, being the newbie on crypto, what do you see the trends, future trends of crypto? Do you have I know you don't have a crystal ball, but you're pretty well versed in this subject. What do you see the trends being?
Yeah, I mean, look, it's still very early days for the asset class overall. I think that Bitcoin is going to take market share from gold over time. I think younger folks are much more attracted to Bitcoin than they are to gold, and so over time you'll see that reflected in the investment market caps of each asset. I think that you're going to see some incredible innovation in terms of global access to financial services. We're very for all the things that we could say are wrong with the U.S. system, we're very fortunate to not be in a worse system, of which there are plenty worse financial systems and regulatory regimes than what we have in the U.S. And I think that blockchain payment rails and what's happening in the cryptocurrency sector, similar to the internet, is tearing down a lot of walls that existed before in terms of accessing financial products, financial services, and different forms of money, which matters not that much to folks in the US. We already have a lot of good stuff and every product that you could ever want. So we're like, just holding on to gold in our own custody. But to someone in other countries where they might have hyperinflation or corrupt regimes, this can be very powerful. I understand
that. Let me just say this. Right after 2009, Bitcoin came out. I didn't touch it. I just watched it, and then I had a friend who invested. Our friend in Braze, holy mackerel, he scored big time. He was already rich, but he just got 1,000 times richer. He was already doing great. Landon, he's a great guy. But the other side of the coin is that what is to prevent somebody, because right after that came ICOs, right? Initial coin offerings, like there were IPOs, you had ICOs. What, as an old guy, I go, well, what is to prevent somebody else from inventing their own Bitcoin or crypto?
It's similar to gold. What's preventing someone from, inventing a new version of gold? Well, gold has a history. It's got qualities about it that are, not matched by other minerals. And Bitcoin has these kind of similar things. And
I understand Bitcoin. I'm asking about the crypto market. Why can't I just go and invent my own, set my own little computer up and become data mining Kiyosaki crypto?
You can.
So what?
You can totally do that.
And
I wouldn't recommend it. I don't think it'll be very good for your personal brand. I don't know that you'll make a lot of money off of it. But
why?
Do it.
Why? What is to prevent you? Look, Kim and I have started a gold mine.
But that's the power of it. People used to say this about the internet.
Please.
We're going to make sure that bad information doesn't get out there. The openness of it is part of the power of the market. You're going into
young guys theory. Kim and I have started a gold mine and a silver mine. We know what it costs to mine something. Now, it costs what, $50 for a computer in a used store to start mining Bitcoin?
No,
so everybody can mine it.
You would not be able to mine Bitcoin with.
Well, how about if I start my own mine, Kiyosaki mine? Can I make my own crypto?
I mean, if you start your own crypto, you could make a cryptocurrency that doesn't even have to be mined. You could just literally print it. You could print it out of thin air, like governments print their money out of thin air.
That's what I'm asking.
You could say we've got Kiyosaki coin, and
then you got to build up the confidence, and you got to get people using it, and you got to make it marketable, and people have to trust you.
Why does anybody buy it?
Right.
No, but I understand it. So why? Last question I answer. Go ahead. How come let's get away from Bitcoin. Let's go to ICOs and initial coin offerings. There was a plethora of them. All my friends started offering their own coins.
Yeah.
And I had no idea what they were talking about. I just watched them for a while.
And they're all dead now.
Look, I told you when we started our company, right? So we started our company in August of 2017. That was smack dab in the middle of the ICO boom. And we were raising our initial round of funding for BlockFi and going to investors saying, we think this ICO thing is a little bit of a scam, and we don't need to have a token to build the products that we want and add value for the clients that we want to have. And investors back then would look at us and say, oh, you're so dumb. Like, don't you understand the future is this ICO thing? And in hindsight, obviously we made the right decision, but we've never created a token. We have no plans to do an ICO.
But I'm asking you because you're securitizing it fundamentally. So what, from your, I know you don't have them, or what is to prevent somebody from doing that?
Nothing.
Because, you know, and when Kim and I, this is in the 90s, we started our gold mine. I tell you, that was the worst business we could have been in because gold was at its all-time low, $230 an ounce.
Yeah.
And, you know, LTCM, my friend Rickard's company, had just gone down due to the Russian ruble collapse.
Yeah.
And so what they said about anybody who had a gold mine, so the definition of a gold miner is a liar standing next to a hole in the ground. Well, you guys don't even have a hole in the ground. You have an old Apple computer. You know what I mean? I'm going, holy mackerel, what's to prevent somebody from mining their own Bitcoin or ICO? That's a question I've never been satisfied. Nobody's ever answered for me yet. I still buy Bitcoin. Don't get me wrong.
I think what Zach's saying is it's just like a brand. Bitcoin's a brand. It's got confidence. People trust it. They're using it. You come out with your own currency. You got to create all of that worldwide. That's
anybody can go start a gold mine. It doesn't mean they're going
to. You guys are idiots. You should go back to school and get your college degree and get a refund on it.
Anybody can start a gold mine if they have the money and they have the resources. Anybody could do it.
I can start a gold mine in Canada by going to a river with a pot and fishing for gold. It doesn't mean I'm going to be successful at it. Nobody's going to care, and I'm not going to make any money.
You don't even need to do that with crypto. You can just buy an old used Apple computer.
You can.
That's what I'm saying. So I keep asking, hey, Zach,
anybody can.
Good sport. I'm just asking the tough questions, you know, because the old guys don't know, and really that's what it is. And I'm not speaking from lack of experience. You know, I have started a gold mine, and the Chinese communists took it from Kim, and it was $1 billion property. So I know what it takes to start a gold mine. So don't bullshit me. But I also, I want to know what it takes to start crypto, because all my friends, not all, but I had several guys with ICOs, and they're all gone right now. They thought it'd be the easiest thing on planet Earth, because all it takes is a computer. So that's the question I keep asking.
And it's not hard to start one. It's hard to have a successful one.
That's in life, man. I just want to know what
exactly. To prevent. So in crypto, it's just the same. It's just the same as other parts of life, right? There's no barrier to entry. There's no barrier to say, I'm going to create Kiyosaki coin or Zac coin. Anybody can do it. There's no barrier to create a website. But is your website going to be successful?
But there is a barrier to paying 8% interest. That's the other thing I'm getting at. So I'm just asking you the tougher questions.
Oh, well, that's hard. So I'll tell you what we did.
Wait. So I just wish you the best of luck. I'm just going to give you, you know, when Anthony said you coming on, I said, good. I give him a hard time. You know, my friend is Peter Schiff and Rickards. They all hate Bitcoin. Yeah. I still give them shit. You know what I mean? What the fuck? This is a big world. We can all listen to different points of view, and that's all we do here at Rich Dad. So I trust everybody's listened, learned something, and they can ask you questions. You know, so how they get your website is BlockFi?
Yeah, our website is easy, blockfi.com. I'm on Twitter, BlockFi Zac, ZAC. We might be the only company in crypto that has a phone number that you can
that's great
during business hours, and you can talk to really smart, people on our team. If you have a question about
last guy that worked for
cryptocurrency or setting
Titanic.
up a gold mine or using our products.
Anyway, I wish you luck. I mean, that's a very aggressive percentage rate. What percent is that again?
8.6.
8.6, yeah.
I tell you, it's tempting, man. It's tempting. I wish you the best of luck, and I hope nobody takes you off in handcuffs. Okay?
This was fun. Thanks for having me on.
Thanks, Zac. Take care.
Best of luck. Thank you.
Bye-bye.
And we come back, we'll be doing the final wrap-up on Rich Dad Radio here. But, Zac, you're a good sport, and thank you, Anthony, for, or actually, don't thank Anthony for sending you into this
Lion's Den,
pit
yes.
of vipers in here. You're talking to old guys. That's the problem.
One viper.
Okay, we'll be right back. Thanks again.
Thanks, Zac.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And today we're talking about Bitcoin. So I especially want to thank Zac Prince, CEO and founder of BlockFi. He was a good sport today. Friend of Anthony Pompliano. If Anthony hadn't recommended him, well, we wouldn't have had him on the program. So if Anthony says he's a good guy, he's a good guy. You can listen to the Rich Dad Radio program anytime, anywhere on iTunes, Android, and YouTube. And please leave a comment. All of our programs are archived at richdadradio.com. We archive them because we don't have anything to sell. We just sell, or we offer knowledge or information or points of views. So go to richdadradio.com, listen to this program one more time, and because repetition is how you learn, you'll learn twice as much the second time around. But more importantly, if you play this with friends, family, and business associates, people who are still stuck in the dark ages, this would be a good way to learn more. You can discuss what was said on this program. Not that it's right or wrong, but what can you learn? Because we're not selling anything. We're not recommending it. It sounds good. He was like, Zac was a good sport, but I'm just asking old guys questions, because for full disclosure, Kim and I own a lot of gold, silver, and Bitcoin, but we own it. We hold it. We don't lend it out. Okay, so we're not against anything. Any comments, Kim?
Well, I want to thank Zac Prince, CEO and founder of BlockFi, and it's blockfi.com. Couple things. One thing, he opened my eyes to want to learn more. That was the biggest thing I got from this show is I want to learn more about what he does, more about Bitcoin, because I do like the idea. One of the keys I liked of this whole process and his system is if you hold Bitcoin and let's say you're going to sell some, you could go to Zac and say, I'm going to keep it with you. I'm going to take a loan out against it. And then you still have the Bitcoin and you have the cash. So it fascinated me. It opened my eyes. It's very innovative. And basically, it's actually not all that innovative because he's basically, as we said, doing what the banking system is doing, but doing it with Bitcoin. So it definitely opened my eyes, and I want to learn more.
Good. Sarah, what do you think?
I think the same thing as Kim. I am not tech savvy. Bitcoin is, way beyond my head, but this did spark something for me to at least learn more. And I think that is the goal of our show is we just want to open people's eyes and show them something new. Interested in the technology aspect. I love that it takes Bitcoin, which basically is useless at this point. I mean, because nobody's accepting it as a regular currency and you're able then to use it, for other things. So I get that side of it, but still need to do way more studying.
Well, if you look at cash, in some countries, they'll pay you a negative 1%. It's called negative zero interest rate. The U.S. is probably going there too. So what that does is it screws mom and pop who have been told to save money, get out of debt, and invest for the long term in the stock market. Because all that happened when they just print all that money goes into the stock market. So the stock market is this massive bubble. So the old guys like my generation, we're in serious trouble. And so that's why I wrote the book, Who Stole My Pension, is because when they dropped interest rates to, let's say, 1%, when pensions are supposed to be making 7%, and they haven't performed in years. So the pensions are empty. So mom, pop, and police officers, firefighters, and school teachers are up the creek. They're going to get screwed big time. So people are so desperate for this thing called yield. I'm going to get 8%. They get sexually stimulated. They throw their money at Zac. But at least in a bank, there was a thing called FDIC, Federal Deposit Insurance Corporation. In the stock market, you can lend out your stocks for short positions and all that stuff. So there's different ways you can make money. I just question 8%. That's a lot of money. Because my first business, I was promising 20% if they loaned me money to start the nylon wallet and Velcro company, and we didn't pay because the counterparty was me. I wouldn't lend money to me, but somebody did. Anyway, that was the question.
I was going to say it's a good question because when we look at real estate, right, and sometimes there's new developments coming up, and they say, and we're going to guarantee you a return of 9% on your money, guaranteed. Well, you can't guarantee anything in real estate because what happens if the market crashes and all of a sudden you're on the hook for 9% interest? So we run from those deals. So again, it opened my eyes. I want to learn more. I want to do more research. I'm going to check it out.
All right. So that's the whole point here. Anyway, Thank you to Zach, and thank you to Anthony Pompliano, because old guys have got to learn, but this is a brave new world out there, and 8% interest is very attractive. Thank you, and thanks for listening to Rich Dad.
Thank you.